On basically every single AMC video that I make or that I see on YouTube, I also see apes that are talking about AMC may not short squeeze until 2023. So let's address that. Is it possible for AMC to drag out until 2023 or even beyond that, as well as go over the over leveraging that is going on with the huge increases in portfolio value that we are seeing on some of our biggest short sellers of AMC stock. So let's get into this video. I don't want to waste any time. So as you guys do know, the margin debt is very obvious. It's published by FINRA once a month on the 21st of the month. So we will get this update for the August margin numbers coming on the 21st of September. And these, in my opinion, are likely to have went up quite a lot. But what I am seeing from the Fintel data is that the largest shorts of AMC, really the big guys, take a look at this. Simplex Trading, the largest short position, at least the largest put position, short put position we can see, because obviously you guys already know this, but the SEC does not require hedge funds to disclose how many shares they have actually shorted. But this is the largest short position on AMC as far as puts are concerned, sitting at about 0.77% of their portfolio. So a very large amount for a hedge fund that does, in their case, have about, what is this, almost 10,000 open positions. And when you just take a look at the portfolio values and the huge increases that we have seen since the start of 2020, since just money has become easy to borrow, a lot of these funds are deep into margin, probably relatively similar to Archegos, not nearly as bad, I would imagine. On average, Archegos was about 8 times over leveraged, so they had 8 times more margin than they actually did have of actual assets. But you guys can see this huge drop. Obviously, they probably took a hit right here during January, February, and March when obviously the meme stocks did go through a bit of a short squeeze and a gamma squeeze. But take a look at their portfolio value, which has almost doubled in value since the first quarter of 2021. Exponential growth. This is only possible, in my opinion, due to margin, because margin, as we do know, it really helps to compound your gains, but it can also help to compound your losses. And this is going to play an important role into if AMC can take years to short squeeze. We are also seeing the second largest put position on AMC being from this firm. I cannot say this name whatsoever, so I'm not even going to try. But their portfolio value is $711 billion. Take a look at this. Ever since 2020, the start when money became easy to borrow and interest rates are basically at nothing, you guys can see the portfolio value of this fund has went up over 100%. Now, why do I say this is really only possible due to margin? Or extreme levels of margin? It is because take a look at the current positions of 12,462. Yes, hedge funds, just like the name, they do a lot of hedging, but to have seen your portfolio over double in value in 18 months, that means 12,462 current positions on average would have had to yield over 100%. There's going to be winning trades, there's going to be losing trades, but I don't possibly think that your portfolio value could have went up over 100% on average with 12,462 positions. Obviously, if you made fat bags on Tesla, great. Yeah, it is possible if your whole fund was in something like Tesla or majority of your fund. But 12,000 positions, I don't think that is possible without compounding gains due to margin. And this is the same exact chart you see on all of these very large hedge funds. Take a look at Jane Street Group as well. They have their top 5 biggest short positions on AMC. Look at this exponential growth ever since 2020, going from about 70 billion in assets under management now to 240,000 or 255 billion of assets under management. I said thousands, billions of assets under management. So that is over a 4x increase in value since the crash of 2020, after their portfolio obviously was steadily growing since they did actually start reporting their information to the SEC and to FINRA in 2014. But this growth right here unsustainable. That's what I want you guys to know. Unsustainable, very prone to the overall market swings. And they, yet again, have about 10,000 current positions. So to see, your positions go up 400% on average is very, very unlikely unless you're using a lot of leverage or margin. Now, that is a big point that I did want to point out is the severe over leveraging, and all the hedge funds basically look like this. Jane Street Group going up over 400% since 2020, just 18 months ago, is a very extreme example, but virtually every hedge fund has went up over 100%. One, I don't think that is possible without using extreme level of margin, given how many positions that they do currently own and how typically diversified these hedge funds are. But what I'm trying to get across is margin, yes, compounds your gains, but it also compounds your losses. So we are on the edge of seeing a massive liquidation in the markets. Nobody can deny that. If you deny that, you're denying factual information that we have went over in every single video. And that's what it really comes down to, thinking about the AMC short squeeze. Somebody like Jane Street Group, $255 billion of assets under management. The other firm that we did look at about $711 billion of assets under management. The largest firm at about $103 billion, which is still amount. And then, like I said, this firm that I cannot say at $711 billion of assets under management. They are not going to be forced to cover if AMC goes to $1,000, $5,000, $10,000, even probably $25,000 per share. They simply have way too much money because money has been easily printed this year. Now, what in theory could happen is these shorts, they don't want to cover if AMC were to go to thousands of dollars per share. Obviously, they don't want to lock in billions of dollars worth of losses, even though it wouldn't sink the fund. They don't want to do that. So they would be forced to pay this average cost to borrow, which the cost to borrow average is 1.66%. The cost to borrow max, 3.14%. So odds are, unless we're talking about 10, 15 years, they would make more money or less losses just by paying this cost to borrow average. And obviously, the people that actually did lend these shares out, they're not going to call on these shares to be returned at thousands of dollars per share because they would make a ton of money as well. They already know that's going to happen. So they would just continue to collect their interest. Obviously, this may go up, it may vary, but the general concept stays the exact same. They would not be forced to cover until the markets do come down. So I think that is the ultimate thing that will cause the AMC shorts to cover. But in theory, this could take multiple years to actually play out. I don't think that is the case, but I still think we're looking at about 3 to 6 months at the very minimum before we did see this short squeeze kick in. It ultimately comes down to the market crashing because like we did see back here, let me pull up the Ortex data for you guys so you're fully aware of what happened in the past. Well, we did see this rally from about $12 to $70. The highest tick that we did get from the exchange reported short interest was 20%. That actual day it was 20% was May 28th. We seen that rally in AMC between June 1st and about June 4th. And we did get the next settlement date at June 15th, 16.63% short interest. And then the lowest one we have gotten since the short squeeze or gamma squeeze did happen, I should say, because it wasn't very many shorts that actually covered, was June 30th at 14.76%. So these shorts, they are not covering. They did not cover this last time. So odds are you're going to see AMC go to hundreds of dollars per share, and the short interest is probably going to go back to about 14, 15%. You're going to see the smaller hedge funds that don't have hundreds of billions of dollars actually be forced to cover. But the big guys, like I said, they're not going to be forced to cover. As we can see with these short positions, Simplex Trading still has the same exact short position from last quarter or from 2 quarters ago when they first initiated this. So does Jane Street Group, and where's this other one? So does this very large one right here. So the top guys obviously are not covering whatsoever, and that is what you guys need to know. Worst case scenario, it does take years. They are forced to pay the average cost to borrow or the high-end cost to borrow, whatever the case is, whatever the percentage is, it really doesn't matter. But eventually they would bleed out capital, but that would take years and years. So it ultimately comes down to these hedge funds, institutions, portfolio values going down and really going back to the levels that they were at about 2020, which was about 18 months ago. If that does happen, you're looking at the short squeeze happening relatively fast. It does look like it is in our favor. The markets are in very choppy waters, but I don't want to get into that whole situation too much in this video. So that is my prediction in between the next 3 and 6 months. I am here. We are riding this thing out. If it does take years, I don't simply think that is the case. It all revolves around the last missing piece to this big puzzle, which is the AMC mother of all short squeeze, which is the market crash or correction. So all in all, AMC has its mother of all short squeeze when it has its MOAS. We don't know when it's going to happen. In my personal opinion, it's going to be at least a couple of months. So we are locked in and loaded until that does happen. So hopefully this did clear the air for some of you guys. Just to recap, the only way this does take years is if these hedge funds continue to pay the cost to borrow, and the risk to reward ratio, or really, you know, how much you potentially make or lose by doing this, is up to each individual hedge fund. But eventually it would come to an end. Theoretically, it could take years, but I don't simply think that is logical in that sense. So that is all for this video. Hopefully you guys enjoyed your weekend, and I will see you in the next one.